Now, here's a question that has been doing the rounds. If the current Iran conflict turned into the 1973 oil crisis, what happens? The markets are obviously nervous about the growth and inflation implications from surging energy costs and potential supply issues from the Persian Gulf. Risk assets took a beating while energy prices across the board soared to worrying levels from the Iran crisis, which shows no signs of abating anytime soon. Well, crude oil marked the biggest weekly surge since 2022 due to the escalating war in West Asia, disrupting energy markets. Benchmark Brent crude surged to over $93 per barrel, marking more than 20% surge for the war week. U.S. crude posted the biggest weekly gain on record, adding 12% on Friday to settle just below $91 a barrel, the largest daily jump in almost 6 years. Now, what happens to the world's energy markets and the consequences for the world from the Persian Gulf? It will depend on how long the Iran conflict lasts. Despite safe haven bets, gold fell 1.2% for the week, stalling 7 consecutive weeks of gain. The dollar and Bitcoin ended with gains for opposing reasons. Now, with the major assets cover, let's shift our focus to the Asia-Pacific stock markets. It was a sea of red across the region, with the bleeding in emerging markets the theme for last week. India's blue chip index fell nearly 3%, while Chinese stocks ended marginally in the red. Japan's Nikkei led to the decline in the region with a 5.5% slump. The Aussie index closed out the war week with a near 4% fall. In the Americas, Wall Street stocks slumped to mark their worst week since November, with the S&P 500 down over 1% on Friday. Beyond the market impact, the price being paid by the U.S. for the war is largely economic. In less than a week, the cost of oil has jumped $20 a barrel, turbocharging affordability issues plaguing many Americans. Other regional stocks also came under renewed pressure following days of volatility tied to the conflict in Iran. The Canadian benchmark fell 3.7% and the Brazilian Bovespa crashed 5%. Looking across the Atlantic, it was a bloodbath. UK benchmarks near a 6% slump marked the lowest hit in the region. The South African index crashed the most with over a 9% fall. German and French benchmarks slumped well over 6.5%. The other regional assets took a beating, including currencies. Having looked at market moves, let's now turn to the overall economic outlook. First, let's take a look at Asia. The disruption in oil supply weighs the most on the Asian countries. Most countries in the region rely on energy imports from West Asia through the Strait of Hormuz, which is nearly shut. Apart from fears of running out of energy reserves, inflation worries have started to mount despite the short-term hit expected. India is still forecast to remain the best performing major economy in the world. The latest data preceding the Iran war indicates that India's growth surged even more. However, for several other countries in the region, the uncertainty from U.S. tariffs are weighing on the growth outlook. In addition, China continues to battle a property recession and a deep deflation from weak demand. Reflecting those concerns, Beijing at the Two Sessions meeting set its growth target at its lowest since 1991. And in the Americas, surging gasoline prices have created new political woes for President Trump. The Iran war adds to the already mixed-up messages on the macro front, clearly reflecting a clouded outlook. Job growth in the U.S. has stalled, with some indicators flashing a recessionary sign. At the same time, inflation worries have come into focus after higher-than-expected factory gate prices and surging energy costs. Well, big Wall Street banks caution that stagflation risks are on the rise, even as inflation does not yet reflect the much-feared tariff impact, while Trump's trading rhetoric extended to other economies in the region. In Europe, the standard norm across the region, even before the Iran war, started with a muted economic environment. The West Asia conflict adds to the region's woes. Europe's growth engine, Germany, is struggling to get its manufacturing activity back on track. GDP in the UK just about showed some growth in the final months of 2025. And in addition to those concerns, Trump's trade brinksmanship is hurting the economic outlook for the region.